The comp, notice that we have pulled back to previous breakout resistance area, now should be support. If we lose that 382 level, we could see this lower trend line, which I suspect will happen. Note the increased volume, and also that we have NASI, the Nasdaq Summation Index, crossing, as well as the MACD a few days ago. Note the chart of the gold spot price and the day chart, that we do see a nice bounce pass through the 23 fib retracements. We have a target at the 382 level, which we noted here on the chart, and the gold monthly, which we were following for some time, where we see MACD, where MACD is turning and could conceivably see more upside. We have this nice double bottom, and we're back above the 382 level on the monthly chart. It goes back to 1999. The industrials, note the double top at a lower high, RSI moving lower, and we're down to the 382 level and previous support resistance levels. I note the lower Bollinger Band here just shy of the 50% retracement. And again, we have a MACD cross, and slow stow is oversold as our first indicator. Nikkei bouncing off of this trendline resistance on the monthly. New York Stock Exchange Composite, same thing, down to a support resistance level, RSI weaker, down below 50. We're at the 382 on the fibs and the 50% just below that. I'm anticipating that we could see this lower trend line if we don't resolve what's going on in Ukraine and China forthwith. Note the cross of the New York Stock Exchange high-low indicator. This is 20 period moving average. Crosses to the downside are bearish, and crosses to the upside are bullish. The Russell, we have yet to touch the area of the 382 and previous support resistance levels, but that could happen this week. There seems to be an appetite for higher risk, even though many of the indicators are turning lower, and could catch a lot of these traders off guard. Slow stow is oversold and did bounce, but we do have a MACD cross showing that we could see further momentum to the downside. Strength to the S&P 500 did tick up, so that's looking a little promising, but the CCI continues to give us a sell signal. This is a chart of the S&P 500, the index indicators that I use. We're seeing the same area here, that right along this curvy level, where we have previous support resistance at the 382 and this lower long-term trend line. We're in a longer-term bull market, but we should continue to see short-term weakness. MACD and NYSE has crossed the New York Stock Exchange Summation Index, and we continue to see weakness in NYMO and again in the MACD. The 10-year Treasury yield, note that we did lose the 200 period moving average. I don't have it shown here, but the 200 period was cruising up and running right through this level here. We lost that on Thursday. Note the fib retracements I have backwards here, but we're right at a complete. Note the fib levels are reversed, so don't pay attention to those. If TNX continues to move lower, there's a possibility we could see the builders, ITB, and XHB move higher. So we want to keep an eye on those. And the REITs are already starting to tick up, which we noted in our scans, and utilities as well, that we have a couple positions there. The ARCA Institutional Index, again, if you don't follow me, this is a index that follows the 75 stocks that most institutions have as their core investments. As such, we like to watch the buying and selling on these for indications on what institutions are doing. You can see that we dropped out of this flag that I was anticipating and sold off pretty hard. We have the lower Bollinger Band here, but it is starting to turn down. If the upper one turns up, that's just showing an increase in volatility, and we could conceivably see lower prices. Note slow stow, and MACD here is crossed as well. CCI hasn't gotten down to an oversold condition, and we don't have a buy signal as of yet. This is a chart of AGG, the Barclays Aggregate Bond Fund, which fund is used as a benchmark for many of the 401k funds. Note that we had this handle that we broke out, came back down, retested, and have bounced since out of this big cup, a smaller cup and handle. MACD is starting to turn, and we're starting to see higher prices on those bond funds. This is a chart of the carry trade, DBV, the Deutsche Bank Currency Harvest Fund. The carry trade has been moving sideways, starting to drift lower again after about 2 weeks of sideways action. We see this trend line. If we extend it, we came down, we're about to test it again. Lower is bearish for stocks and higher is bullish for stocks. Note the previous double bottom here and what we possibly could do. Note back also the MACD has crossed, though it is moving somewhat sideways, and the oscillation here is pretty much around the zero line, so not much of a signal there. Note the slow stow as well. This is the Barclays 7-10-year Treasury bond, the opposite of the 10-year yield. We want to see this moving higher. We are in bond funds, so we note the Kirby here and conceivably could see higher prices with lack of volume resistance here. Note the MACD cross to the upside. Builders, big cup and handle. We are breaking down somewhat. We should see this reverse with the 10-year yield continuing to move lower. McClellan oscillator. S&P breadth on the 1500 composite. That's the 500 S&P 500, the mid cap 400, and the small cap 600. Note the 382 level here, the previous support and resistance, which we lost. And we noted previously on the advancing declining stocks the length of time that we were rallying, like we saw once before, we saw again, and then we're starting to taper off and see selling here. The S&P Kumo chart, we have support down here at a lower level, but we did lose Tick-N-San, and we do have Kijun-San cruising up to meet price. We could see a bounce at that level, but for the time being this does look bearish. For the time being this does look bullish. With Chico above price, we could bounce off of price or Kumo in the next week or so. So I'm anticipating lower prices, being we did see 52-week highs, and a move lower and a consolidation would be bullish for stocks long term. Looking at some charts for the week ahead, this is our Bollinger Band scan for the weekend, 3/14. Note some interesting occurrences here. We have the short-term futures ETF showing up one of the first times, the VIX and the VXX as well. I'm not sure what the ramification of that is just yet, being we just started posting the Bollinger Band scans over the last 2 weeks. We noted 2 weeks ago that banks were running. We caught some moves higher and then sold at the upper Bollinger Bands as we started to get outside of standard deviation 2, and currently are looking for a pullback, which is leading the S&P 500 lower on the financials, so we'll continue to keep an eye on that. But most noteworthy is if we sort this by sector, we can see utilities have started showing up, as well as energy over the last 3 days, 4 days, trading days, the last 4 trading days. If we look at our utilities index, if we look at our utilities candle glance, as we pointed out midweek, and we enable MACD, we can see the whole index, for the most part, either has MACD starting to turn, already turned, or is about ready to cross in most of these charts. You can pause these and take a look at them. For setups, we took Dominion Resources on Thursday, midday, and we have seen a nice move higher here. We had a Bollinger Band squeeze right in this area, which is the reason why it showed up in the scan in the first place on Wednesday night. And we also have a position in Procter & Gamble on the consumer staples, which are also doing well, and a position in Southern Company, SO, which gave us a cross on Wednesday night, and we look to carry through on a continuation pattern, which we did get. We noted this on Wednesday night that utilities started showing up in mass, and we figured that we would see some good follow through. Now let's take a look at the consumer staples, where we'll also see similar setups going into the week that started to materialize on Wednesday as well. Procter & Gamble, we're also starting to see a 2050 full cross. We can see our Bollinger Bands had compressed. We broke this downtrend, and we continue to see higher prices. We came down and tested the 10-period EMA on higher volume, but we did bounce, and we saw buyers step in towards the end of the day. We're looking to get above this Kirby level here on Procter & Gamble. MACD continues to cruise higher, indicating that we could embed up in this area here above 50%. We're watching MACD to let us know whether or not we'll be moving lower. Southern Company, we saw this flag and this breakout of this flag on Wednesday, and we traded Thursday and Friday. We're still in this swing. Note MACD is turning back up as well. Now with regard to banks, we saw those 2 weeks ago, and we traded this nice breakout of this move here. We got above the up Bollinger Band, we sold. We're looking for these to strengthen again once the indices start to find support levels, and we'll probably be back in banks again. We could see the lower Bollinger Band before we bounce, and an extension of this trend line here at the 16 level rather, at the 16 level. Note MACD. MACD is typically what we use for a momentum entry when we're using the Bollinger Band scans. Dominion, we're looking for these previous highs as well as this upper Bollinger Band area. Note the magenta color is the Keltner channel inside. What we look for typically is a breakout of the Bollinger Bands outside of the Keltner channel, which sets up a TTM squeeze and a green light on that indicator when Bollinger Band breaks out of that Keltner channel. Now the Keltner channel is similar to Bollinger Bands in that they use an envelope, but it's based on a ATR of 2 and uses an EMA to track prices higher or lower. So with Keltner channel continuing to move higher, that's an indication that prices should continue in that direction as well. Going back to our scan for the weekend, I just want to point out that this Bollinger Band scan is not a directional scan. It is only pullbacks in stocks and a lower volatility or a decrease in volatility, anticipating a move up or down when volatility eventually increases again. So many of these trades can also be looked at from a bullish standpoint if they are starting to break down. Let's take a look at some of these in the technology sector to see how they work out. can see that they're running around the lower Bollinger Band. So this may, with a trend line drawn across here, being resistance, and the Kirby level, this could be viewed as a short with the Bollinger Band scan showing a decrease in volatility here and then an increase in volatility. So you have to look at it in both directions. When I post these scans, it doesn't mean that I'm only posting bullish criteria. So you need to keep that in mind. But what we do look for is a group showing up en masse all at one time, like we saw with utilities and energy on Wednesday. These sectors are viewed as, along with consumer staples, as defensive sectors. When you start to see these start to show up, that's an indication that we may see some bearish activity, which we have, and we got ahead of it on Wednesday. SRE was on the scan on Wednesday, and also early in the week, Mikey took this trade and is currently still in it, swinging. Note the Kirby up here that we could get above, continue to stay above, and view as support in the future if we do see a pullback. Bollinger Bands and Keltner are both trending higher, so this is continuing to look very bullish. The green area is just the 50-period moving average. NI is on the scan. We did have a breakout above these highs here, and we're running up the upper Bollinger Band. Note the Bollinger Band prices are above the Bollinger Band, but in between the Keltner, we could see a breakout of the TTM squeeze in the near future if this continues to move higher. MACD is signaling that we could see more positive momentum. Note how we used MACD. When we're inside a Bollinger Band scan and we see a squeeze, we look for the Bollinger Band to give us direction. In this case, we're seeing a bullish move. In the case here where we had some squeezing going on back in November, we looked at MACD crossing to the downside as bearish in direction, which is what we saw. A move at the upper Bollinger Band and then a move lower. One thing also you might want to take notice is many of the biotechs have shown up on the scans, and with the example here, Aspen Biosciences, we were outside of the upper Bollinger Band. The thing I want you to focus on though is stocks like Celgene, which if you look here you can see a shoulder, a head, a right shoulder, and a neckline here down below Kirby level. I'm thinking that if with the increase in volume here and MACD cross lower, as I pointed out before, that we could see a bounce here that could be shortable, and if you decide you want to take puts, you could do that as well, looking for a move lower down to an area of support, which could be these levels here that we previously saw as support and resistance down at 130, 132 in that range. So I am looking at the biotech sector for short candidates going into the week if we see a tepid bounce and a move lower. Let's go through some of these charts that showed up on the Bollinger Band scan. Embraxis Petroleum looking pretty good here. Breakout above these levels here could see a move higher on this cheap petroleum stock. Note MACD is turning, and we saw a really nice volume on Thursday and Friday. Inigo Mines, we mentioned on the beginning of the week that this showed up on the scan. We had a nice double bottom, sort of a cup and handle pattern, and we're looking for a break above this 34.90 level. We saw a little resistance here, but could see some move higher, continuation move higher in the week with the uncertainty in Russia, Ukraine, and China. Note MACD. American Assets, a REIT company. Note that we saw a move off the lower Bollinger Band. MACD has yet to turn. AmeriGas Partners, again, energy sector. MACD turning higher. Armor Residential REITs. Nice sideways range here. You trade the range break to the upside or to the downside, whichever breaks, a base and break pattern. With Keltner continuing to move higher, I would anticipate it's going to be higher. Boston Properties, looking pretty good. Look where we've come from. Consolidation here would be bullish for the stock. Camden Properties, same thing. Nice cup and handle pattern. A break of this pivot here, being this is a continuation pattern, we should see higher prices. Casey's General Stores, these showed up actually last week. And we see this nice trend break of a descending channel pattern, a sideways range that we're breaking out of now. This continues to look bullish with MACD pointing higher. Clorox in the consumer staples sector. Mikey was looking at this one. Note how narrow the Bollinger Bands here. This one's going to break either to the upside or downside in the near future. With consumer staples starting to see activity, I would think that this is probably going to move higher, but you can't. Don't hold me to it. With this trend break here and moving sideways, a sideways range now. Colgate-Palmolive, same thing. We're already starting to see a move here above these recent highs. We see a trend line break coming, but we have a trend line break and moving higher. MACD looks good, and stochastics just turned. Cree looking interesting in technology, but again, technology is starting to see a back seat to selling. Crestwood Equity, a trend break here. I think this is a REIT. CSB Capital came down to the 200 period and bounced. Not much edge there. VIX VXX, we see a bottoming pattern here, starting to move higher. 200 period overhead. The 1-3 year bond credit fund at highs. Jarden Corporation, don't know what they do. Joy Global, just in a big sideways range for a number of months now. Kirk's Biopharmaceuticals, KERX, looks like this could lose this level and be a short, as we mentioned earlier with biotechs. Kirkland's, I'm not sure if they're associated with Costco, because Costco has the Kirkland's brand. But it looks like it's breaking a nice trend, moving higher and starting to get bullish above this Kirby level here. MACD says higher, so does Stowe. Chronos Worldwide. Trend break, sideways range, breaking higher. And we have a Kirby here as well. MACD pointing higher. Leap, they were in talks with AT&T. I think the FCC gave them the go-ahead now. AT&T is going to acquire Pozen. I think Mikey might have mentioned this stock to me. Note the narrow Bollinger Bands, and we're breaking out of the Keltner channel. STR, nice shallow, flat, or shallow cup and handle pattern, saucer handle pattern. Should see a move higher if Keltner continues to move higher as well as the EMAs. Range Resources, GTO pointed this stock out last week in the scan for the last 3 days. Note MACD is crossing, so that looks good. Repos Therapeutics, again, this looks like the EMAs and MAs here are holding prices back. The 200 period is right here, the magenta line, as well as a Kirby, so we could see lower prices if IBB and XBI move lower. Rex Energy, triple bottom area here, not really that interested. Seabridge Gold, nice cup pattern we had drawn in earlier in the week. Seadrill Partners, not much here. Sempra Energy continues to move higher as we pointed out. And the last charts, Spirit Capital, nice break out of this pattern and a TTM squeeze signal with MACD cross to the upside. Target Sept, continuation higher above the Kirby and the 200 period. This should continue to go higher as well. So that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com. Make sure to come over and check out my blog, and if you're interested, you can subscribe. If via email, and you get these posts during the week. I've been posting these scans every day at the end of the day and early morning with charts looking at trades going into the week. You can also come check out my main site and also GTO's site over at Day Trader Bootcamp, and come and meet some of the traders in the room. Okay, take care. I hope this helps, and I'll talk to you in the room on Monday.